Good morning, Joe. Ed?
Phil?
Congratulations on a quarter where you beat on the top and the bottom line. What's the change? Because I think there was some uncertainty after Q2 and certainly after Q1. What's changed in Q3 in terms of what you're seeing with the customer?
Well, first and foremost, a big shout out to our team. They did an amazing job in the quarter, really strong results. Very proud of the work they did. We continue to lead the industry. In fact, our results for Q3, we believe, will represent about 60% of overall industry profits for the quarter. So the team really did an outstanding job. The big change we saw is the revenue momentum, particularly in the domestic system. You know that's been an issue all year long. It starts back the early part of the year following the trade uncertainty, the tariff announcements, consumer confidence dropping. Looking back, I call that, it felt like a spring swoon because everything just stalled out. And then starting really kind of early summer, June, July, really the July period, things really started to pick up.
So you're saying the uncertainty started to go away a little bit.
The uncertainty started to clear, and people got back out on the road, whether it's in business or leisure, premium sectors. Probably the stat that represents it the best is, the domestic system has been the one that's been under the most stress for the year. Industry's been doing a lot of work to get the supply balance in line and also to make sure we get pricing right. Second quarter, our domestic unit revenues were down 5% on a year-over-year basis. Third quarter, our domestic unit revenues were up 2%. It's a 7-point sequential swing just in that 90-day period. And that momentum was continuing. We see it going into the fourth quarter. Sales in the third quarter were 600 basis points higher than sales in the second quarter. And that continues in the fourth quarter. So we're expecting the year end to finish strong. We're expecting the holidays to be great, and we're excited for our team.
And we'll talk about some of the key metrics a little bit more in just a bit. But you mentioned uncertainty. And right now, there's increasing uncertainty with people when they hear about these delays due to air traffic control staffing issues around the country. What are you noticing, and how concerned should we be about the staffing issues that are popping up at different airports around the country?
Honestly, we're not seeing any real impact at all. I'll give you two stats. The first 8 days of the month since the shutdown started, our completion rate relative to schedule was 99.99%. So hardly any cancellations in the first 8 days of the month. And our on-time arrivals for that same period system-wide were 90%. So today, there's no cause for concern. I would say that if this doesn't get resolved, say, beyond another 10 days or so, you probably will start to see some impacts. Remember, no one's lost a paycheck yet. And so I think as this goes on...
we have seen some delays at some airports.
You have, but you see delays all the time, right? So it's hard to parse out what is a delay due to understaffing, which we already know we have, versus a delay that is unusual.
Let me ask you about corporate travel. Up 8% in the third quarter, when you were up just 1% in the first and second quarter.
Yeah.
How much of that is because that uncertainty went away? And were there certain sectors where you noticed business travel is picking up, or was it across the board?
Oh, it's very much due to the clarity of it. When people started to see deals getting done, started to understand how the trade uncertainties were going to clear, businesses got back on the road. I've talked about this a lot this year. This is not a typical economic turndown, which we were concerned about in the beginning of the year, where travel has to stop or people retreat back to their homes or their offices. Because of the uncertainty, you need to be out with your customers. You need to be out with your people. You need to understand what's happening. And I think across the board, people started to understand that. So they did stall in the spring. But as the summer came, everybody got back out. Every one of our business sectors were up meaningfully in the quarter, and some quite extraordinary.
On the flip side, when it comes to the main cabin, there was a lot of hand-wringing about the lower-end traveler, the economy traveler, perhaps not spending as much or being more cautious. Do you think that a lot of that has been alleviated, or do you still think that there is some caution out there in that part of the market?
Oh, there's two consumers out there. Fortunately, at Delta, we're focused on the premium consumer. Those with pretty strong economic capability and capacity, they have the desire to travel, and they're traveling. And that's true whether you're seeing it in American Express. Loyalty, our co-brand spend in the quarter was up 12%, which has been all year long, which for a credit card in this economy this year, that's pretty strong. You're seeing it in corporate travel, and you're seeing it in premium services. The lower-end consumer is clearly struggling, and that's where a lot of the supply adjustments have gone in to try to balance out some of that. There were way too many seats in the marketplace earlier this year chasing low-end consumers, and now I think that's getting a better balance. But I don't think the work is done yet.
Transatlantic has been a bit soft in the last 8 months, 9 months. Do you see that picking up?
It is. Fourth quarter, we expect a pretty significant improvement. Again, getting supply better balanced to demand. We went into the year, you put your summer schedules out there 9 months in advance. And so we were expecting a robust summer season as we've been experiencing the last several years, but there was a pullback. We had a bit of a international point of sale issue where Europeans, particularly Canadians, were not maybe coming to the U.S. in the numbers that they have previously. We supplemented it with more U.S. consumers. There were pricing issues. That is, I think was very much a peak issue. But as you get into the fall, the off-peak, it's looking really good, and I think that's going to be one of the big sources of improvement for us in Q4 over a year ago.
2 quick questions. Holiday travel, how's it shaping up?
It's a little early, but it's looking good. As I said, those sales that we saw in Q3 are up really strong versus where we've been seeing all year long, and that's continued in Q4.
And if the air traffic control issues continue, let's say for another 10 days, are we at a point where some people might pull back in terms of booking a trip, or do you think that it's not to the extent of hitting bookings yet?
There is so much momentum in the marketplace to travel. I don't really see that. I think people will be watching, and if there's some significant challenges and issues, we've been through this before. We were through this about 7 years ago. The numbers back then, it was roughly for Delta, it was a 35-day shutdown. It was about $1 million a day. You're not going to find that in our numbers. It's pretty small.
Ed Bastian, CEO of Delta, on a day where they beat on the top of the bottom line with a huge surge in corporate travel. Guys, back to you.